Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, welcome back after a lengthy break.
Jim, it is good to be back. I had to take a 3-week leave to deal with a kidney stone that didn't want to leave, but it's gone now, and I'm feeling fantastic.
That's great to hear, John. John, so now that you're back, what is the state of the junior resource sector following PDAC?
Well, my worst fears are being borne out. There is no PDAC curse this year because, of course, we didn't see any rally in the first place. But what we have seen is a continuing grinding lower of the junior resource sector. I created a new page on my website. It's on the home page. It's unrestricted. I call it the State of the Junior Resource Sector, and it has some long-term charts which show what the situation is, but it also has a short-term chart that shows you what the average traded price is of the TSX Venture-listed resource juniors, as well as the traded value. And the traded value is a fraction of the total value. The total value, it's about sort of running 14, 17%. The rest is all these cannabis-related stuff, and so on. But what's really discouraging is that not only is there no rise in the traded value of resource juniors, but the traded price is flat and has been flat for some time now. And we're now in the 8th year of a resource sector or junior resource sector bear market, and you can feel the mood out there turning distinctly pessimistic. Now, maybe my misery of the last 3 weeks has influenced me in thinking in these terms. The yield curve, the U.S. yield curve, has inverted for the first time since 2007. So we've got concern that a recession is looming. The Dow Jones and S&P have roared back to make new highs. This is now the longest-running general equity bull market ever, and it's difficult to imagine how long this can last if we do go into a global recession. So the audiences that have historically played in the junior resource sector, they're sitting back and sort of saying, well, if we get a 20-30% correction in the general equity markets, that's not going to be good for the juniors. If it's going to be anything like 2008, it's not going to be good for gold either, at least in the interim. So we're just going to stay away and watch this from the sidelines. Now, personally, I don't think this is at all like 2008 when the suddenly bid off on everything was caused by a collapse in the entire financial system and the meltdown in the housing market. In this case, it would simply be a collapse of expectations about where this economy is going from here onwards. It would be a haircut for all these pension plans that own all these stocks and hope to be able to, pay out their actuarial requirements. And of course, for all these people who do own equities, either directly or through those various passive index funds and that, well, their net worth will go down, a certain percentage, but none of that should really have a negative effect on the economy, because contrary to all the hype about the trickle-down effect, the extra wealth created in the last while is not really translating into extra spending by the 1% that controls all this. So I'm not at all concerned about a pullback in the equity markets. What is needed for the resource juniors, there's historically been 2 types of audiences for them. One are speculators who like to make a lot of money when a junior makes a brand new discovery that takes the stock up 5, 10, sometimes in world-class cases, 100 times in price. And the other has been the gold bug type who has seen the juniors as a leveraged proxy for gold. So rather than, just own gold and hope it doubles or something like that, they buy the juniors, and when gold does start to move, it'll have a disproportionate effect on the juniors. Now, the first audience, we haven't seen a significant discovery for a very long time. So the memory is fading. Plus, the Canadian banking establishment and the regulators have created a situation where the audience that still understands what resource juniors and discoveries are all about, well, they're generally 55 or older, and the brokerage industry has decided that buying high-risk stocks like resource juniors is unsuitable. So this audience, they can't go to their full-service broker and put in an order to buy some cheap junior, because that broker will say, no, I can't do that for you. So they're stuck going to the through the discount brokers and doing whatever it is that they want to do, but nobody's telling them, hey, here's something happening. So they're waiting for the tape to show something substantial erupting out of nowhere, and for good reasons, not a pump and dump like we've seen in a bunch of these little juniors where you get these cheap 5-cent unit financings coming free trading, and then you get a bunch of clown newsletter writers all retained to start pumping it, and then you get the algo traders and that crank these things up, and all of a sudden you see some worthless junior with a implausible story trading millions of shares per day, and that the stock goes up 4 or 5 times, and then it just quietly dies and fades again as this crowd that engineers these pumps and dumps moves on to other things. The other audience, the gold audience, they have a problem right now, because to give a thumbs up for gold, and there's very good reasons to give a thumbs up for gold, is to also give a thumbs down to Donald Trump, their hero. And they don't really want to do that. So their enthusiasm for gold ownership, and then also the junior proxies, it is very muted. Now, there is half the American population who conceivably would love to give a thumbs down to Donald Trump, and could do so by buying gold, but gold and the gold juniors are not even on their radar. We need to see a rise in the gold price, very visible gold rise, and then people starting to talk, well, why is this happening, to move that entire audience back into the gold sector, and then you'll start seeing money go into the juniors. So this has made it very, very tough for the resource juniors. And February was a particularly depressing month, because the TSX Venture resource listings raised only $50 million. That's the lowest amount since August of 2015. And to get an even lower amount than August 2015, which was probably the abyss of this bear market, you have to go all the way back to 2002. And this is a problem, because if you're going to make a big discovery, you need capital. Without capital, you can't drill any holes. So with half of the 1,200 TSX Venture resource listings with hardly any money, or worse, negative working capital, those companies are dead in the water. They're not raising anything because nobody wants to pay off existing debt. And the others, because exploration is expensive, they're having a hard time raising any money because the glass is half empty, or even worse, the attitude out there is that as an exploration junior, you're a failure until proven otherwise. And a very good example is one of my KRO favorites, Wolfton Resources, which in January reported its initial resource estimate for the Pickett Mountain VMS deposit in Maine. And it still had several $1 million of working capital, but it wanted to raise additional money so that it could continue, exploring this deposit and add to the resource, build it up, go beyond just having this as something that direct ships to somebody else's mill, but could be developed as a standalone operation. And as soon as they went to Bay Street to raise money, Bay Street said, "Oh, well, guess what? We're not funding anything, but here, whatever we have, we'll sell this stock and we'll finance you at a lower price." So the stock, which had been as high as 30 cents earlier this year in the wake of the resource estimate, started trending down. So the CEO, Ron Little, said, well, I'm going to go after a strategic investor. I'm not going to go to you guys because I really don't want to do some financing in the teens. Well, the stock did get worked down all the way to 17, 18 cents where it is stuck. And a couple of weeks ago, they finally announced a strategic investor who gave them $2.5 million at 20 cents, a slight premium. And it turned out to be Kinross Gold. And so I'm scratching my head. Well, Picket Mountain is a high-grade zinc copper deposit with gold and silver credits. What is Kinross Gold thinking, making that would make this a strategic investment for them and not just for poor Wolfton, which is trying to avoid all the clip and flippers on Bay Street. And it turns out that Kinross's best mine ever was the Crown Jewel high-grade the gold deposit in northeastern Washington, which they originally tried to develop as an open-pit mine, but eventually gave up because in that part of the world, open-pit mines do not get approved, developed it as an underground mine, and it was the most profitable of all its operations in its history. And so it's thinking, okay, the state of Maine spent several years completely revamping its mining law. It doesn't allow any open pit mining. It's now set up for business for something like this. The Picket Mountain deposit as it stands now is a high-grade underground mine. Whatever else they find is also going to be underground. So this is an investment by Kinross that actually makes sense because it has experience operating high-grade underground mines profitably in the United States. And so now Wolfton, its treasury is back to a level where they can resume work. The first thing they're going to do is go back to one of the last holes drilled last year to the north of the east and west lenses into the so-called footwall zone, where based on their structural reinterpretation, they now think that the geology has undergone some sort of fold and that there's a limb that could host a massive sulfide deposit similar to the east and west lenses, blind, not outcropping at surface, so, easy to explain why it wasn't found by Getty decades ago. And if this downhole survey demonstrates that there is a conductive body down there, then they will be able to resume drilling in probably May, sometime in mid to late May when the spring thaw is over in this area, and do shallower drilling to try and find increase maybe 50%, maybe even more, the existing resource, which they could continue to expand by chasing it down plunge, but that involves drilling deeper, more expensive holes. But the whole point of this is to just show how difficult this market has become to raise money for stories that are amongst even the best of the 1,200 juniors that are still out there in the junior resource sector on the TSX Venture.
We'll have more with John Kaiser right after this.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with John Kaiser. John, PJX Resources just completed a deep hole on its Vine project in southeastern BC. Did that generate any joy?
The news release, when you read it, or at least when I read it, you thought, oh boy, I wonder how low the stock got. And yet it hadn't really budged. It had sort of dropped back from to 20, 22 cents. It had been as high as 30, 33 cents earlier this year. And so I, took a close look at it and talked to the CEO, John Keating, and said, okay, what exactly have you learned about through this hole? Now, to just give some background, this is the Vine project. It's in southeastern British Columbia. the target there is a Sullivan-type deposit. The original Sullivan was 150 million tons of high-grade zinc, lead, and silver. It was a classic SEDEX-type deposit, a sedimentary exhalative deposit, formed in a marine setting through smokers piling up, spewing their metal-rich fluids into the water, and then it all precipitating down and building these pancake-shaped types of deposits. And historically on the Vine project, the focus has been the Vine vein, which outcrops at surface, and it's high grade, but it's not very large, not worth developing. And the PGX, when they picked up this project, 5 years ago or so, did some gravity surveys and realized that there's some big gravity anomalies suggesting very dense bodies at depth, which could be massive sulfide deposits. And so they've drilled a number of holes for the last few years and didn't really find anything to explain the gravity target, and then did a magnetotelluric survey last year which focuses on conductivity. And of course the conductivity is not going to be from the sphalerite, which hosts the zinc, or the galena, which hosts the lead. It's going to be from the pyrite and pyrrhotite that's also associated with this deposit. And it's always possible that all you have is a big pancake of iron sulfides which aren't worth anything. So they realized that after analyzing the location of the gravity high and the MT anomaly, that they were offset from each other, and said, okay, the MT anomaly is probably more reliable. And the gravity is offset to some degree. So they started a hole earlier this year, trying to drill at an angle to intersect the target area, which is projected between 800 and 2,500 meters deep, which is pretty deep. But that hole deviated so badly they gave up. Instead, they drilled a vertical hole which only underwent modest deviation, and they pushed it to about 1,488 meters. And the reason they stopped it there was they were very close to what they project to be the Moyi Fault, which is this sort of north-dipping, northeast-southwest dipping regional fault, on the other side of which are younger garbage rocks that have absolutely nothing of economic potential. So you want to be north of the Moyi Fault. And the model that they have been pursuing is that of a broken hill type of a system, which is an original SEDEX system that has undergone folding and deformation through metamorphic pressures. In this case, they think it is the movement of the Moyi Fault which has created these pressures, which would have dragged the original pancake that would have looked like the Sullivan deposit, and then the pressures would have sort of squeezed it because the massive sulfides are more mobile than the rest of the rock. They would have flowed and changed, and the geometry is going to be completely different. And this hole did not hit anything resembling massive sulfides. But when they got through a fault, they did hit tourmaline alteration. And that is the key reason the stock did not collapse, because they have never seen tourmaline alteration on the Vine property. So they now know that they're in an area where the rocks have been dragged from elsewhere. Tourmaline alteration is created during sort of the last stages of a smoker system. It will build up as the fluids flow through the system. It alters the rocks, both the footwall rocks and later hanging wall rocks. It's not the source of any economic minerals itself, but it is a good sign that there is a Sullivan-type system, or at least one that once was a Sullivan-type system, in the vicinity. And so they are now going to do a downhole geophysical probe to see where the massive sulfides that would explain the MT anomaly are located. And we probably won't know for till early May what the results are. They'll get this probe going. They'll have to interpret the results, and they won't resume any drilling until probably late May, because now that part is also undergoing spring thaw. But they also drilled an earlier hole into a shallow MT target that suggested sulfides, and they hit a very narrow, 0.2 meter vein of massive sulfides that had crept its way into a 2 meter wide quartz vein. And this stuff ran pretty good zinc and lead values. It's of course of no economic consequence, but the geological context tells them that this was not driven by hydrothermal processes. This was driven by metamorphic processes. It is very likely remobilized mineralization from an original SEDEX deposit, and it is very similar to the original Vine vein, which outcrops about 800,000 meters to the west, which they also believe is remobilized. And in the context of the holes that they drilled in 2015, which were targeting the gravity anomaly, and which ended up, being pushed all the way to the Moai fault, those ones did intersect some banded sphalerite, which was also interpreted as somehow remobilized. So the game is still on. They've got a deep hole in there from which they will be able to wedge. They don't have to re-drill the whole deep hole. They will be able to do a downhole survey to see in what direction the massive sulfide bodies is, and they'll be able to resume drilling probably late May, and hopefully give us a discovery in this part of the world where if you found another Sullivan scale deposit, that would also unleash an area play, a great Canadian area play.
We'll have John Kaiser's final thoughts right after this.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
John, you have very high hopes for a great Canadian area play in the James Bay region of Quebec, where Midland started a drill program in mid-March on the Mithril project. Any discovery news on that front?
On March 12th, I published a tracker which explained the situation for Midland exploration. It also pointed out that if Midland has a world-class discovery, it probably also projects onto the ground to the west, which Azimuth and SOCLAM own 50%. And then there was another third junior, a third tier type, which has land in the area. It's a penny dreadful. I'm not going to mention the name because that stock will only take off once we have confirmation that there is a world-class discovery, and I want my subscribers and myself to have a first shot at cleaning this up. But the key ingredients for a great Canadian area play is that, there has to be a lot of serendipity associated with the emergence of a new discovery. It has to be in an area where something like this has never known to exist before, and there also have to have been good reasons for previous explorers to never have stumbled upon this. And in the case of the Mithril deposit or project, it is a field of boulders that are rich in copper with gold, silver, and molybdenum values. It's an Archean rock, so it's a very old system. There is almost in fact, there is no pyrite or pyrrhotite in the area. It is, which of course would have rusted and created gossans that somebody flying over with a plane would have seen and says, here's some rotting sulfides. Let's let's go here and check this out and bang some rocks. So this system was overlooked for ages. And of course, the James Bay area is a new exploration frontier. Eleanor is the mine that emerged after Andre Gaumond and his Virginia gold mines made the discovery in 2004. The Quebec government has designated this as Plan Nord. So there's an awful lot of interest from the government side to see another major discovery, especially one that justifies bringing in more transportation infrastructure. I mean, there are roads in this area, but for gold mines, well, you just need to, airlift the gold bars that come out of the mill facility. Whereas if you have a major copper discovery, you're going to have to bring out concentrates and bring them to a smelter. So there are many groups that are extremely interested in seeing this turn into a world-class discovery. Midland has done a IP survey, which indicates that there is a chargeability anomaly beneath the trend of this boulder field. They just announced today that an extension of this survey to the northeast shows that this chargeability anomaly shows up in an overburden-covered area where there are no frost-heaved boulders or anything to tell you what's going on in the bedrock. So that's suggesting substantial strike potential. They started drilling in mid-March of a 10-hole program, 2,000 meters. They have completed 5 holes. The stock for the past couple of weeks has been sinking down after trading there $1.40 or so. Today there was about 400,000 shares traded in blocks at $1.25. It turns out that there has been a seller in the market. Apparently one of the parties that took part in the 2015 financing at 70 cents. There was 20 million units done. The 3-year warrants expired worthless last year. Gino Roger won't say who it is that's selling, but he has found a buyer for at least part of this iceberg. All he would say is that this is a party which engages in risk management. In other words, they don't really want to see what is underneath that boulder field. They don't want to find out that maybe that there's just some discontinuous mineralization beneath this boulder field that explains the chargeability anomaly. Because of the location, this system has to be rich and it has to be large. There are no consolation prizes for a copper system in this part of the world. And if you can remember who it is that likes to quote Ben Barrack saying that they made all their money selling too soon, you can probably guess who the likely party is that's doing risk mitigation ahead of results. They are keeping a very tight lid on the results. They do not plan to put out any visuals at all. They will continue drilling until Good Friday, Easter weekend, because between then and the end of May, the area becomes restricted for goose migration purposes. They will have the results, sometime in May. So we'll have to wait several weeks. But the body language and all that suggests that this thing so far has not had that, deflating feeling as, this is just maybe something like what Everin had when Newmont got excited and gave them $7.5 million at a very high price, and then as soon as they drilled underneath it, there was nothing there, and the stock collapsed from $1.30, $1.50, all the way down to 30 cents where it sits now, with a nice healthy treasury, but with anybody who didn't sell all too soon, pretty unhappy about the result. So I'm optimistic that this is still in the game to shape up to become a great Canadian area play. The obvious cheaper stock is Azimut, which has not retreated in the way that Midland has after doing that deal that allows them to back into the area, into the project. And there's no real good maps available that allow you to see what is all staked up, but the whole area is very quickly being staked up. And if those of you who can remember what a great Canadian area play is all about, if something like that explodes on the Canadian scene, every piece of land will end up being owned. And as I mentioned earlier, a key ingredient is that the area, there has to be something about the discovery, which means it's not so easy to dismiss the possibility that another land in the area could not have something. It is the glass going from like 90% empty to 90% full. We have not seen that for more than a decade on the Canadian scene. Right now, I think the James Bay play there of Midland, the Mithril, has the greatest shot at bringing large audiences, the traditional discovery exploration style speculators back into the fold, breathing life into the Canadian juniors, and then watching similar plays elsewhere start attracting audiences.
John, so glad to hear that you're back with us, hopefully fully healthy.
Yes, I'm really pumped. Even though it's been a depressing few weeks watching the market and dealing with my situation, but I'm back on track, and I'm optimistic that things are finally going to start happening in this sector. And I do think it's just a matter of time before gold starts to break out on the upside. And I don't think it'll be in one of those catastrophic circumstances where you don't want to own anything. You just want to go hide in a bunker somewhere.
John, thanks a lot.
Thanks, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.